Would you like to know how to become a more consistent trader? Stay tuned, traders. We're going to talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today is, I think, a great video. We're going to be talking about how to become a more consistent trader and some of the things that I've done in order to ensure that I can have consistency and simplicity to my trading approach. So I'm going to go over one of the strategies that I look at with the markets and how I was able to incorporate that and ensure, or hopefully simplify and ensure, that I was going to be able to become more consistent. Now ultimately, I think all of our goals are similar in that we want to be consistently profitable over the longer term, and not necessarily knock out every trade out of the park, but ideally be profitable on a regular or consistent basis. So one of the things that I did, and I talk about learning a lot from Peter Brand and going back and reading Schaubacher's book again and Edwards and McGee, and I'm constantly flipping through that, and Brent Penfold's book, and looking at other traders' blogs and sites and reviewing trade setups. But one of the things that I look for, and I've talked about this in other videos, is I look for rectangular congestion patterns. I look at weekly charts, I look at daily charts, and I still will look at hourly charts as well for these similar patterns because they show up over and over again. Now, one of the things that I look at is the highest and the lowest close of the last 20 periods. Now, not the highest high or the lowest low, but I look at the highest close and the lowest close. So I have an indicator that will alert me to that on any particular chart, and I also run a metastock scan daily over the daily charts. Now, one of the reasons I look for that is that will show up occasionally, but what I'm looking for is rectangular or flags, symmetrical triangles, any types of patterns where there's been a buildup of a congestion, whether it's on the weekly or the daily charts. And again, on the hourlies, I'll have this alert on my indicator as well. But I look for, it doesn't have to be a breakout, but it can be a breakout of a pattern within a pattern. Now, Peter Brand talks about this. One of the great things you have to get through your headspace is that if you want to participate in a market that's going to be a huge running market, at some point you have to be participating in a trend trade. Now, one of the things that I like to try and identify is the beginnings of these trades when they're breaking out with a pattern within a pattern. So when we have a larger congestion pattern, a symmetrical triangle, or we have a topping pattern or a sideways pattern, we want to look for smaller patterns within those patterns. And one of the reasons why that is, that these can be powerful, is it enables us to position ourselves early into a potentially strong move. Now, in often cases, especially on my end-of-day charts, I will use that particular day, and I incorporate a couple of other things to filter that out to identify the highest possibility trade setups based on the Monday to Friday opening range, is that I can use one bar as my maximum stop. So number one, it's simple. I can scan the markets every day and have 3 or 4 pairs come up, and within 5 minutes know whether or not they fit that criteria. And usually there's 1 or 2 really good trades a month that offer me a really great opportunity to position myself, and they don't always run or explode out. They may be an early move into before the market makes its bigger move, but they enable me to take a trade where there's momentum in the market and I can predefine my risk, and there's potentially an asymmetrical risk-reward opportunity. So number one, it's really simple. It's easily reproduced and tracked. So again, price-based. At some point, I'm going to be participating in a market that is beginning to make a larger trend move. And that's what I want to be able to do, is participate in markets that are moving, and I'm allowing the market to pick me up with a limit order. I can put my maximums, predefine my risk by positioning my stop either under that bar or the range, however you want to position it, or above if you're going short. Again, we can extrapolate outside of these measured moves. If you've studied McGee or Schaubacher's book or Peter Brand, again, you start to understand that these markets will often reproduce measured moves of the ranges that they break out on the larger patterns, whether it's a weekly pattern, daily pattern, if you're using hourly charts, whatever that is. So it potentially will help us identify if a market explodes strongly and goes through this level, there's a chance then it will reproduce it 2 or maybe 3 times. But if the market starts to have two-sided trading or slowing down, then we can obviously look for either a price-based exit to extrapolate money out of the market, or again take a whole position off, or be willing to tighten our stop loss up and allow it room that if it fails we can still get out with a reasonable profit, or if it's going to continue that we can potentially set a profit target for the next level. And again, if you're not sure about these patterns and the ranges, study those books. The links are below. And I think that's really important, because again, you're looking at maybe 1R for a 4 or 5 or a 6, 7, 8R return on your trade. That's where you can really start to understand that taking losses is okay, because you're gonna potentially enter into markets where you're gonna get stopped out at a small loss or at break even. Now again, risk management, that's critical, because these are the types of opportunities that allow you to focus on managing your capital, and again, when these markets break out and move, extrapolate a multiple R on your risk. Now what's important about this type of opportunity in terms of trading like a highest close in 20 bars or lowest close in 20 bars is that I can consistently apply that to the markets. So if you're, however you're trading, is it easily reproduced? Is it easily duplicated week in and week out? Is it easily managed and tracked? Is it easy to look at your risk reward and manage your position sizing in your capital that you're going to expose into the market appropriately? These are the types of trading setups that I look for. So the Hope Lope is very similar, but it's still based on the same principles of identifying a rectangle, a pattern within a pattern, maximum amount that I can predefine my risk before I enter the market, and then also again an asymmetrical risk reward opportunity from that geometric range that it's breaking out from. So hopefully you got some value out of today's video, traders. Focus on simplifying your trading edge, so that you can become more consistent and duplicate that week in and week out, managing your capital, predefining your risk, and having an asymmetrical risk reward opportunity. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.